What's up, my fellow apes? Hope you all had a wonderful weekend. Monday was a phenomenal trading day for ticker symbol AMC. We are up 14.8% on the day, another 2% in after hours. Hope you all had a wonderful weekend, and this is a great way to start Monday off. Do me a favor, hit that like button because we like this stock. Hit that subscribe button because we like the stock. Hit that bell because guess what? We like the stock. We're a bunch of apes and we're going to diamond hand the stock all the way to the moon. And I'll see you guys on the moon so we can enjoy a nice moon pie together. But in this video, we'll cover the charts, we'll cover the short interest through Ortex, we'll cover Stocko Tracker, we'll cover a CNBC article, and then we're going to talk about a FINRA filing that I think is really important going forward. And I'll include all this information down in the description of the video. But without further ado, let's take a look at the chart. So what I'm going to do here is I'm going to zoom out a little bit here so we can get our nasty gap up we had this morning. So on Friday, as you guys know, we closed around 43.70-ish kind of thing in the after hours. It was not the best day on Friday. And then we had this disgusting gap up here to the psychological resistance of $50. We broke through it during the pre-market, dipped back below it, but ultimately as we opened the day, we broke back above it, opened the day at $52, almost slapped $60 right in the butt, just a little bit shy. We pulled back around $55 here. And the huge thing that I want to point out here is if I had to draw a support line, I drew it in here at $55 because really during the trading day, we bounced off this point several times. We made our second attempt here later in the day to get towards that $60, and then we quickly got the flush going on here of a lot of red candles with very long wicks going on here, and we moved from about $58 to $54 in the period of about 5 minutes. Now, to me, that's not really normal going on within the stock. But then again, guys, we have a lot of volatility going on here, but wink, wink, SEC, something definitely is going on here. So we consolidated above $55, broke back down through it, and hit our intraday low here of $51.80 before trying to work our way back up and ultimately getting rejected around $55.25 and closing the day $55 flat. In my personal opinion, I absolutely will take this day. It was beautiful. We had some periods of consolidation today, and I really want to preface that with quotation marks because our consolidation is very loose because the stock is very volatile right now. It is moving up and down a lot right now. We closed the after hours at $56.20, which is definitely a good sign for the stock. Now, if we do zoom out here to the 1 month, 1 hour chart and talk about this bull pennant here, we had a descending level of resistance followed by an ascending level support converging together, and we were looking for a move. And I really like using the 1 hour time frame because the 1 hour time frame, we have a lot of times seen that we have a good level of support, validating that we are breaking above this trend. And that is exactly what we did today, is we broke out of this bull flag to the upside and then consolidated later in the day at a higher mark around $55. Absolutely phenomenal day for the stock in my personal opinion. And I'm really looking for us to get to that 62.04 mark in the next couple of days because we did trade at that for several days on end. So hopefully we can get back to that point. I absolutely think we can. The options chain is bullish. Everything seems to be bullish. And thank you, Melissa Lee, for saying naked shorts on national television because it is definitely going to help us provide a lot more people looking at AMC, basically. Let's just keep it short. But the next thing I really want to do, guys, is to help put us a little bit at ease. When in doubt, guys, zoom out because this is huge. The past 14 days, we have been trading like crazy. We have essentially gone from, let's say, like 12, 13-ish dollars to $55 on this stock. That is insane. That is a lot of movement within the stock. We hit a high of, yes, $72.62 during the day. We're not that far away from it now at $55, and we can absolutely get there again, in my personal opinion. The short squeeze has not squeezed yet. I think what we're seeing is a lot of delta exposure of market makers trying to hedge for it, which is causing a little bit of a gamma squeeze going on here. And as we continue to get more and more volume rolling in, what we'll see is as we get more and more volume rolling in and get further up in the price and more money, more call options start becoming in the money, the more market makers have to delta hedge themselves to reduce their delta exposure, which is something that we definitely want to do because it will help with the gamma squeeze, which might end up leading into the short squeeze. But in my personal opinion, the short squeeze is not here yet. We're just seeing delta exposure coupled with FOMO, in my personal opinion. Now, the RSI and MACD, I know that I've used these indicators in the past, but honestly, guys, at this point, take them with a grain of salt. Yes, they are incredibly overextended, but they're only really looking at the candles of the stock. And that is a big deal because they're missing out on the shorts. They're missing out on the fact that Melissa Lee said naked shorts on national television on a Friday afternoon. That's a big deal. The stock can't look at this. So these indicators are really just with a grain of salt. Now we're going to hop over here let's cover the short interest first and we'll work our way from left to right. So our short interest change was down 13.23%. Our current short interest or free float is to be estimated around 12.1%. Still a heavily shorted stock. Our free float percentage on loan is still 21.65%, guys. So 21.65% of AMC's free float is still out on loan. That is a significant short position out on loan. It is crazy to even think about, guys. Now, we have seen our days to cover drop, but we have seen our volume drastically step up from where it was before, which is going to cause our days to cover to go down. Our average cost to borrow is around 7.16% today. Our max cost to borrow was 11.92%. And the reason why the cost to borrow isn't going up is because we're seeing a lot of returned shares. These could be possibly shorts covering, maybe smaller hedge funds, people covering, but a lot of this is coming from the shares on loan. We did see our short interest change drop by about 8 million shares today, so there might have been a little bit of covering, but not a lot going on. This is still, personally, in my opinion, absolutely squeezable. Now, the thing that I really want to talk about is our utilization is down to 88.93%, which is going to be tied to that cost to borrow. Shorts are now more available to borrow because we've seen a drastic returned amount of shares. Because if you think about it, 2 days ago, T plus 2, remember, transaction plus 2 days of to settlement would have been here on Webull, if we look at the past 5 days, would have been the 3rd. And what did we do on the 3rd? We moved from $37 to $69 in that day. That is a huge range. That's a $30 range, guys. And that is a lot that is going on. And I'm not surprised that we saw a lot of shorts returned during that time frame. Now, I just want to say there's still a very large short position outstanding within the stock. I still am diamond handing my shares. I am not selling. I am going to the moon with all you fellow apes, and we're going to enjoy a nice moon pie together. Now, let's cover Stocko Tracker here. We have 137,215 calls in the money. That's a lot of calls, and this is what's causing that delta exposure and market makers to have to hedge for that. So that's the reason why we're seeing essentially a little mini gamma squeeze going on here. And the further we drive up the price, the more calls that get put in the money. At $60, we're going to put another 35,212 calls in the money. That's a lot of hedging that they have to do. There's 600,000 short shares of AMC available to borrow, 64,609 short ETFs that are available to borrow. So we are seeing those short shares come back in. The thing that I want to point out here is at 10:32 this morning, they only had 200,000 short shares available to borrow. At 132, 150,000. So they are still absolutely using these short shares, and we are still seeing a lot of shorting going on within the stock. Now, the thing that I want to scroll down here and take a look at is the failures to deliver, FTDs. On 5/14, we closed at $12.77. We had 126,435 FTDs. Can you guys only imagine the amount of FTDs that we probably have around this time frame, and we'll see it in the future? It's probably going to be a lot, in my personal opinion. And that's just me, but I think it's going to be a lot. Now, the next thing that I want to talk about is this FINRA rules guidance that is basically talking about transparency around short reporting, because shorts, when they have to report now, they can report when they want. It's not a mandatory guideline. You have to report on X day of all this kind of thing, and it's not really severely audited. And we've seen FINRA slap hedge funds before with fines saying, hey, you misreported kind of thing, and the FINRA fine is very small compared to, I'm sure, what that short position brings in for that hedge fund. So the fact that FINRA is requesting comments on short position interest, reporting enhancements, and other changes related to short sale reporting is a very good thing. I'll link this down in the description because the comments, guys, are very interesting to read, and it's definitely good that they're starting to take a look at this. Next, I want to talk about this SEC article that came out on CNBC. SEC says it's monitoring the ongoing volatility in certain stocks and vows to protect retail investors. Well, cool, they're on our side kind of thing. Well, what stocks are they talking about? AMC, Entertainment, BlackBerry, Bed Bath & Beyond, and to a lesser extent, GameStop? To a lesser extent? I think that should be more to an extent, but that's just my personal opinion. But the fact that they're taking a look at this, we have prime brokers saying we don't really want to allow shorts kind of thing. Goldman has done it. Like, you can go look at the article that I talked about yesterday. That is huge, guys. The writing is starting to be on the wall. A lot of these people are saying, we don't want any risk exposure to this. No, 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 no. That is a huge deal, guys. And that is definitely a significant kind of alarm and red flag that goes off in my head saying, why are all these people stopping this? Oh, wait, it's probably a lot worse than what we are actually seeing and probably what is reported. And they're probably absolutely screwed. Now, the last thing that I'll leave you guys with here is taking a look at the options chain for this week. The options chain for this week is absolutely just stacked. We have 17,000 calls expiring at $73. We have 29,464 calls expiring at the $145 strike. Now, keep in mind, these contracts are only about $162 to buy. Today, if you slapped the ask, there was 92,984 contracts traded at this strike today, which is definitely saying a lot. The options volume was stacked today. We are seeing a lot of options contracts traded. We saw about a 60-40 put call, 60% call, 40% put ratio going on here today. But guys, the other thing is these puts are absolutely stacked too. It's $65. We have 1,533 puts expiring this week. That is a lot. If we can drive the price up even higher and higher, this is going to be a lot of puts expiring out of the money, in my personal opinion. It'd be really nice to see all those people who want to short this stock, their puts become worthless, because let's face it, we want to go long on the stock and we want to go to the moon. But guys, I'll see you guys in the next one, and hopefully tomorrow is just as sweet as today. I'll see you in the next one. Peace.